everyone. Thank you for joining us once again here at Seafried and Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we want to review over the third quarter GDP release that came out last Friday. Now, this is the advanced release, so there are some preliminary numbers in here, and most often will be adjusted somewhat as we move forward. But it did come out very favorable. 3% GDP growth for the third quarter of 2017, beating expectations that about 2.6%. So that's a pretty good number as we see inside the 3%. We're continuing to grow faster than the average when we look back since the beginning of this recovery. But let's look into the numbers and see where the contributions came from. Overall, when we look back into history, we can see where we are here at that 3%, just under where we were in the second quarter at 3.1, but pretty far above the other quarters going back to the first quarter of 2015. So we're on a pretty good stretch here. Looking at the numbers. When we look at the individual components, if you recall, the four main components of GDP would be the consumer segment, the investment segment, government, and then the net export imports. Overall, the consumer segment would make up 1.62 percentage points of that 3% growth rate. That is down from where we were last quarter when the consumer segment made up 2.24 percentage points. So we've come down just a little bit. However, we're still making progress and that's still positive. If we look at the quarter over quarter growth rate in the personal consumption expenditures, that's the consumer portion, you can see we did have a downward trajectory here where we grew slower in the third quarter than we did in the second quarter. So that's something to be aware of, and hopefully that trend will not continue as we move into the fourth quarter here. Looking at that investment segment, that investment component there, 98 basis points. Compared to what we had last quarter at 64 basis points. So we had a pretty big uptick in that, and that is primarily due to that inventories investment here in the third quarter. In fact, when we look at the contributions, 2/3 of this contribution was made up of those inventories. Overall, we can see the growth in this segment quarter over quarter. We're up here at 6% growth rate for the quarter, much higher than where we were back here in the second quarter. And in fact, the first quarter, if you recall, we were negative here. We do find in this segment, though, the residential real estate investments continue on a downward trajectory. This is the second quarter that we saw negative contributions there. Negative growth rates in that segment. Hopefully we'll start to see that pick up. We're looking at the government segment, detracted 2 basis points this quarter, 3 basis points last quarter, so we had a little narrowing of that, but not much at all. A lot of the good growth is coming in that defense spending. However, we still have the state and local governments kind of winding down in their spending right now, pulling these numbers down. Another kind of big move would be the net exports imports, contributing 41 basis points compared to the 21 basis points last quarter. When we look at this trend in these two numbers, what we'll find is the period over period growth rates for the exports came down but remained positive in here. Now we're just above that 2% mark. However, for the imports actually went negative. And while that's a negative number, negative growth rate, for the contribution into GDP, that's a positive. In fact, that added an additional about 12 basis points to our GDP in here. The fact that we are importing less goods and services than we were last quarter. So overall, very positive and favorable outlook. Going into the fourth quarter, we hope to continue this conversation as we look at the next release of GDP. That's the end of November, where we get some maybe refreshed numbers, some revised numbers, and hopefully we'll stay at or around that 3% mark. We look forward and talk to you next week when we look at that job situation report coming out on Friday and see how the whole hurricanes have impacted in September and how that flowed through into the October job market. Look forward to seeing you next week. Have a great week, everyone.